Technology companies are learning an old lesson from Wall Street: maturing means shrinking. Meta and Amazon saw their shares spike on Friday following their fourth quarter earnings reports. While revenue for both topped estimates, the story for investors is that they're showing their ability to do more with less, an alluring equation for shareholders. There's also a recognition that investors value cash, in many cases, above all else. The tech industry has long preferred to reinvest excess cash back into growth, ramping up hiring and experimenting with the next big thing. But following a year of hefty layoffs and capital preservation, Meta on Thursday announced that, for the first time, it will pay a quarterly dividend of 50 cents per share, while also authorizing an additional $50 billion stock repurchase plan. The key with these companies is really that they're able to reinvent themselves, said Daniel Flax, an analyst at Neuberger Berman, in an interview with CNBC's Squawk Box on Friday. They continue to invest for the future and play offense while at the same time manage expenses in this tough environment, he said. Amazon is less aggressively moving to send cash to shareholders, but the topic is certainly being discussed. The company instituted a $10 billion buyback program in 2022 and hasn't announced anything since. On Thursday's earnings call, Morgan Stanley analyst Brian Novak asked about plans for additional capital returns. "Just really excited to actually have that question," Finance Chief Brian Olsavsky said in response. "No one has asked me that in 3 years." Olsavsky added that, "We do debate and discuss capital structure policies annually or more often," but said the company doesn't have anything to announce. "We're glad to have the better liquidity at the end of 2023 and we're going to try to continue to build that," he said. After years of seemingly unfettered growth, the biggest internet companies in the world are firmly into a new era. They're still out hunting for the best technical talent, particularly in areas like artificial intelligence, but headcount growth is measured. Staffing up in certain parts of the business likely means scaling back elsewhere. For example, Meta CEO Mark Zuckerberg told investors that when it comes to AI, "We're playing to win here and I expect us to continue investing aggressively in this area in order to build the most advanced clusters." Later on the call, when asked about expanding headcount, Zuckerberg said new hiring will be relatively minimal compared to what we would have done historically, adding that, "I kind of want to keep things lean." Olsavsky said most teams at Amazon are looking to hold the line on headcount, perhaps go down as we can drive efficiencies in the size of our business. The story is playing out across Silicon Valley. January was the busiest month for tech job cuts since March, according to the website layoffs.fi, with almost 31,000 layoffs at 118 companies.